Welcome to the Iron Mind Podcast. Join me, Josh Brumley, as we explore the minds of those who forged their paths through legal battles, business triumphs, and creative conquests. In each episode, we sit down with inspiring individuals who sharpened their resolve in the fires of entrepreneurship and law. From lawyers breaking barriers to entrepreneurs overcoming obstacles, we uncover the stories behind their iron wills and innovative minds. Get ready for thought-provoking conversations, practical insights, and actionable advice. This is the Iron Mind Podcast. So you have a magic trick for us.
Absolutely.
Let's see it.
Absolutely.
Let's see it. What do you got?
So, I always like to say, I like to begin every conversation, right? Like, the magic's within you. And,
Okay.
Right? The magic's within you.
That's a very optimistic way to look at it. Okay.
You have to be that person in life. Okay, so what you're going to do with this deck of cards, you're going to split it in half. So go ahead and split it in half.
Okay.
Well, you have to be 26. It has to be evenly split. So you have to do 26 and 26.
I think I actually am really close. Look at
You're
that.
very close.
Oh my gosh.
But you're a little bit off. You're a bit off. What do you want to... Okay, there you go.
Is that better?
Do you want to count? At least one side. If one's 26, the other has to be 26.
Three, 4, 25, 26.
That isn't... Okay, so let me just say this. I done this magic trick early on today, and the same thing. They're like, no, I'm sure I got it at 26. And we betted on it, and I lost $300. So I was not going to bet. I was like, do you want to bet? And I'm like, I've learned my lesson earlier today.
I play a lot of Magic the Gathering. Splitting the decks is a big part of being a card nerd. Yep, I'm sorry, I'm a card nerd.
Oh, jeez. I don't know what's with you, card nerd. Okay, so then you're going to just pick a deck or one of those, and then split it. No, just split. And then take your top, and then take your... whatever.
Take the top card or split it?
Split it and then take that with you. Perfect. So
like this?
Yes.
Okay.
So then I haven't counted that. I don't know how many cards are in there. I haven't even touched that, right? Mm-hmm. Okay, so then what we're going to do is we're going to pick a card from here. Any card.
Do I show it to the camera?
Yeah, show it to the camera.
Okay.
Okay. Everyone saw it. Okay.
Yeah.
I didn't see it. Okay, now you're going to put it on top of there.
Got it.
Now, this is in the middle of the deck, okay? We can
Right.
agree that's not the middle.
Right.
Okay, perfect. So then what I'm going to do is I'm going to take a card from top and bottom evenly, right? So top and bottom. It's a little tricky because we don't want to take more than... Okay. I'm a little nervous because if it doesn't work out, then
It's
my
on
rep...
camera.
Yeah, and I don't have any more head as a magician, but... Hope it all goes well.
At least you have a side career as an insurance salesperson,
That's what I
right?
tell people. You know, if insurance all goes down the drain, then I have a side gig going on already, okay? I do corporate events. Okay, so this is where it's a little tricky. We're going to go into the final cards here. Now, camera saw the card. You saw the card. Would this be your card?
No.
No. Okay, you're right on. It won't be your card. So here's what I'm going to say. The magic's within you, right?
Mm-hmm.
So then you want to count how many cards do you have there?
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 cards.
Okay, so now haven't touched them, and you're going to do your own magic here. Your card is going to be the 15th card there.
1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14.
That's
Flip
it.
this.
Flip that.
Whoa! Okay,
Hey.
now you don't even need to sell me any insurance.
I
You're a
know.
magician.
I'm a magician.
I know you can do it all.
So now you know. And that's how I sell insurance. You have your routing account number in place. So anyway, let's get to it.
I'd love to hear about your background as an insurance salesperson, the company you work with, how people can reach out to you if they have questions after listening to this podcast.
Well, thank you. I started insurance when I was 18 years old. It was my first job out of high school. I started cold calling. It's still one of my favorite things to do. I can cold call a phone book. It's a beautiful career. I started at 18, working with who today is still one of my best friends. He's a State Farm agent.
Mm-hmm.
His name is Haig Tadavosian, so I do have to, give him some respect there. Still one of my best friends, and he started his agency, I believe, 6 months before I, came on board. We grew that agency together, and it was fun, and it was exciting. I then realized that work wasn't for me. I tell everyone I kind of retired at 24. I was like, you know what? I'm going to take it. This is it. I've worked enough.
Wow.
So then I didn't really, my mom owns a restaurant. And so we have a family business. And we said, we're just going to help out with that. That does really well. So from 24 to 28, I really did nothing besides birdwatch and learn magic tricks. And
Wow.
had a very easy 24 to 28. But I never let my insurance lapse, my licenses, because you have to have a license for the state of Washington.
Okay.
So I never let those lapse because I always knew insurance was something I loved. And I always tell my team it comes from you loving to be a protector of people. It really does. You have to have that in you in order to do insurance because you really are protecting people or being there for them their worst day. So I love that. And I love the feeling of people saying, hey, Anel's my agent. She has my back. It's going to be okay.
Yeah.
So at 28, I said, okay, I probably should start doing something with my life.
No more bird watching and magic tricks.
Watching,
okay.
Or magic tricks. Or painting.
Oh, well.
I've done a lot. So then I said, okay, I reached out. I remember this story, right? I always tell my district manager, one night I was like, okay, I Googled district managers for farmers. And I wanted to be with farmers. And I got someone in Arizona saying, hey, you emailed the wrong person. Let me put you in contact with someone in Washington. Long story short, I went in for an interview. And 2 months later, I had my own office. 2 to 3 months later.
Wow.
Because I knew that's what I wanted to do. So that's a little bit of the background about insurance. And I'm with farmers. I've been with them for 5 years now. We just had my annual review, and it's gone by so fast.
Yeah.
I had some goals for my 5th year, and they were achieved. And the next 5 look pretty amazing here. So
Congratulations.
yeah,
Congratulations.
that's a little bit of my background.
So, do you do every kind of insurance? What do you like to sell most? What do you like to do?
Good question. I like to, if you're gonna be good at, just be good at one thing. I always say that to myself, right? Be good at one. Be the best at one thing. And
So smart.
yeah, I can't do it all. I stop from, I don't have the attention span to do it all. Very sporadic, I tell people. So I focus on auto and home. Auto
Okay.
and home, auto and home, auto and home. I can do everything else. I can do live, I can do commercial and all that. But for now, auto and home are my bread and butter.
I'm really curious about how the recent changes in Washington State's credit checks for insurance pricing have affected what you do for business. Can you talk about the changes in the law for credit checks?
Absolutely. This was after COVID. Mike Chrysler is the commissioner for insurance, and he put into effect the law that says that insurance companies can no longer use credit for premiums. Now, backdrop on that, insurance companies use credit heavily for any premium. So then that was mandated effective immediately. So then what insurance companies had to do is they had to remove the credit score for really putting every individual in a sector. So they were kind of lost as what to do and how to really rate someone accordingly to earn a profit. So when that happened, all of our rates were on an even playing field, I believe, for everyone who came to the insurance market, right? Because now they're no longer getting hit if they have a lower credit score. Right now that was all perfect for about 8 months. And then what all the insurance companies in Washington did is they went against the state and they said, we need to use credit scores. And anyone who didn't fall under that credit, really sectors of people, they would call adverse selection. And they didn't want the adverse selection going into the preferred markets. And I think that's what they really tried hard and stopped that law and to plain of, have a little further, how would I say that? Just being a longer law in effect. So that only lasted about 8 months.
And so there's a current lawsuit that the insurance companies brought against the state of Washington to stop that moratorium.
And I don't really know how far that's gone. So those are legal terms. Mm-hmm. But what I do know now is that we only were able to use no credit scores for about 8 months.
And now you are allowed to use credit
We
scores
have
again.
to.
Okay.
We have to.
Okay.
Again, every insurance company in the preferred market was not going to allow that state. Yeah, they just weren't going to allow it. And so now we're going back to using credit scores, and how that plays into effect with people paying their premiums. And we were speaking a little earlier off camera, is credit scores are heavily used for people's premium amount. And as we know, higher incomes means higher credit scores, and they're going to be a preferred sector. So they will be able to afford really insurance that they need. Like, we're going to go into PIP, UIM. They'll be able to afford it because of the credit score they're under, or the zip code they're under, or the demographic they fall under. Anyone who's out of that goes into the standard market, and PIP, UIM becomes a lot heavier on premiums, and it becomes a lot more expensive for that special sector of people.
So if someone has a good credit score and a high income, their insurance is less expensive than someone who's not a middle class person who doesn't have a great credit score. It's actually more expensive and makes it harder if you're in a car accident to be made whole.
Yeah, absolutely. And I think that's a fair statement to say. So that's how that credit score works, right?
Wow.
So something to keep in mind.
Heavy stuff for the question one. All right. So let's start with PIP. I think a lot of people who hire me as their car accident attorney, a lot of people who come here asking questions or call asking questions, people just don't understand what insurance terminology is. You're very passionate about it. You know, I'm relatively passionate about it.
You are passionate about it.
Okay. But I think a lot of people kind of their eyes glaze over when they talk about these terms. And so PIP is personal injury protection. Can you talk a little bit about what that is and what it covers?
Absolutely. So one of my favorite coverages for anyone really out, driving, here's what I say. PIP covers the following. If I happen to hit you, right, it's my fault, because it's a non-fault coverage. So it's at fault, not at fault. But I happen to hit you, it's my fault. My liability portion will cover your medical, would cover your vehicle, will cover rental car, so you're taken care of. But if I don't have PIP and it's my fault, then no one's going to pay my medical. Or if I have passengers with me, no one's going to pay their medical. So PIP covers my medical if I'm at fault, up to $10,000 or $35,000, depending on what you purchase for yourself, and that pays directly to the provider. It's a huge difference between UIM. I'm going to UIM in a few minutes, but PIP will pay directly to the provider for any medical expenses that I need, up to $10,000. Now, mind you, that's really not a lot.
Right.
It's pocket change, really, for the medical. The medical establishment.
I'm writing a book right now, and one of the statistics that I've included that we just went over a chapter with my editor before this, the minor.
What don't you do?
I'm sorry. I'm doing a lot. I'm trying to overachieve here.
That's good.
But the statistic was actually that minor car accident medical bills total on average $15,000, and most people don't have PIP, and PIP covers $10,000 or $35,000.
Yeah.
So if you don't have PIP, imagine spending $15,000 on your own medical bills or the medical bills of the people who were in your car when you didn't have the coverage in the first place. You didn't have the money to pay for that coverage in the first place because your credit score was bad or because your income was so low that you weren't able to afford that part of the coverage. And it's not a mandatory part of Washington State's requirements. So
it is in Oregon. So
maybe really? Oh,
Oregon, you are mandated to have PIP UIM.
Okay, well, that's good to know. So it's really tough to say, like, $10,000 in coverage. It seems like a lot of money for someone who doesn't have $10,000 in the bank. But when you're injured, $10,000 goes quick, like you said.
I've always had a problem relating to people.
Yeah, because you know so much about the policies. You see the terror and the bad stories.
Here's it, and I think, thank you for bringing that to my attention, because I am more of a liability person. I need those 100, 300s, 100 because I need to protect people's assets.
Right.
So when I think, and again, I'm getting a different perspective, because I'm like, 10,000 is nothing. Like,
yeah. And
I don't mean to sound pretentious, but I'm saying my point is I focus on people's liability.
Right.
So, but now that you say that, yeah, I think $10,000 is a lot. If 15, I'm happy about that statistic. If 15, I thought it was more than 15,000.
Yeah.
Because
that's for the minor.
60%.
That's the minor injuries. That's the minor
Right.
injuries. 15,000 is for minor injuries.
Yeah.
The average coverage
10 to
or the
60
average medical expenses.
10 to
So,
60% of that. So that's
Yeah.
pretty significant coverage.
and what we see is a lot of people don't have that coverage at
Yeah.
all, and so that's the sad part of what I do is analyze those coverages and say, oh my gosh, you didn't have PIP, you didn't have UIM, and they say, well, I thought I had full coverage. Well, full coverage means different things to different people,
Right.
and that's just a generic term that people throw out. So when someone comes to you, and I know Washington requires for PIP a signed waiver, right? Can you talk about that?
Absolutely. So that's one of the things that I'm very careful with in my agency, and I'll tell you why. So, for example, if I go over this policy with you and you say you don't want PIP, and I'm like, okay, well, you have to sign this waiver that says I offered it, because instead of Washington puts it on the agent to do that job.
Right.
So I say you don't want it, and you're like, okay, well, the signed waiver says they denied it, they waived the coverage. I love how they use those really nice words. I waived the coverage.
Yeah.
Well, that means that's no way, no.
Yeah.
So then if they happen to be in an accident and they happen to use an attorney, all we have to do is send them that, waived agreement that
Right.
says they decided not to have it. So
Yeah.
that's one of the things my agency takes very heavily. Like, do you know what you're signing? An exclusion. Do you know what you're signing here in a UIM form? But I'll tell you how that even relates to an insurance agent, right? I'm very thorough with having those on hand. I want people, but hear me out, okay? I'm one of those people that I sometimes wish I didn't. I wish I didn't, because my errors and omission will pay out on it.
Oh, yeah, yeah.
So sometimes, and I love my people. I love our insurance.
So you're almost like,
So
I wish
almost like,
I lost
yes,
that form
I
for
lost
them.
that, exactly. So,
We've had success contacting the agent for our clients and asking them to produce the declination page, the page that they signed declining that coverage. And if they can't produce it, then they have to offer that. That's what you're talking about. So any attorneys listening, please make sure you're following up. Don't just take your client's word for it, and
you have to ask
look for that declination page for PIP or UIM.
Another thing. So, I don't know what side I'm playing on.
Well, that's the point of the podcast, to help people.
So my thing is, I love all my insurance, and sometimes when they're in an accident, I wish I didn't have it. I will say in my tenure with insurance, I've only lost one, and they did pay out, and I was happy they paid out. It dinged me on my errors and omissions, but that's only happened once.
But it helped that person.
It helped that person. Yeah, I sleep better at night. It helps me sleep better at night.
That's good. That's what we have insurance for.
That's what we have insurance for. But I will say this. Another thing is, if, as an attorney, follow up with those forms. If it's DocuSign, ask for the summary of the DocuSign. Who signed that DocuSign?
Yeah, and when?
And when. So the summary.
I know how it
I
goes.
want that summary.
Okay. Well, that brings us now to UIM coverage. So can you tell us what UIM covers, what it stands for?
I want to get my cup on this thing. Make sure I got the logo going. I got to get the logo going.
Got to get it in the shot.
Got to get in the shot.
So can you go over UIM coverage, what it stands for, what it covers?
Yes. So UIM. So I got to tell you guys, I ride motorcycles. I have a little Honda. And
you do wheelies? You do any tricks?
No, I don't.
Okay, good. Don't say that. Okay.
But the reason why I say this, going back to UIM, and if anyone, I don't know, if anyone rides a motorcycle, make sure you get UIM in an umbrella. So get your 1 million with the UIM, because you can actually use it for your own coverage under the underinsured motorist portion of it. So, for example, UIM would cover same scenario. Well, in this case, you have UIM. I hit you. I don't have insurance. You call your agent. You call me, because I'm going to be your agent one day, right? You call me.
Exactly.
And then you say, hey, some knucklehead hit me without insurance. And I'll say, don't you worry. I have you covered. Your vehicle will be covered, whatever limits you purchase. You can never purchase underinsured motorists higher than your liability.
Okay.
Because you cannot ask or expect to be covered more than you're willing to cover others.
And right now in Washington, the minimum is $25,000 per person, $50,000 per occurrence.
10, yeah, and 10 for PD.
Yeah.
We need to
property
up those.
damage.
We have anyone listening? We have anyone listening? But yeah, so 10,000 is very little, right? Most cars are worth more than that. So anyway, so you have UIM. Now you call me and you say, hey, someone hit me without insurance. And we'll say, well, we got your car covered. Right now it's going to be covered at whatever limit that is. There's usually $300 deductible at a collision shop. But then you're like, well, they hit me and now I'm hurt. I need medical. Well, most people don't realize, but UIM is paid as a reimbursement policy. It's not to the provider. So that's a huge difference between PIP and UIM. Right? Reimbursed or provider. So if you really want to have your medical covered, I would still choose PIP to have on top. Yeah.
And so if you're injured by an uninsured driver, PIP doesn't pay you for pain and suffering, but UIM would.
Exactly.
And so that's the benefit of having both, is that if your PIP pays out any medical bills, then your UIM can still make you whole for your lost wages and all the other things that are associated with a car accident that's not your fault when you're hit by someone who's either uninsured or underinsured.
Right.
Awesome.
So having both of those, and I wasn't aware about the pain and suffering being under UIM.
Yeah.
So having both of those.
Oh, well, I'll teach you all about it.
I know, because I have an umbrella for it. And that's the reason. So I ride, right? So my umbrella is at 1 million because I know I can use it for myself.
Right.
See?
So you're covered. You're covered.
I might be a little more dangerous on the road now.
You can learn how to do wheelies.
Mm-hmm. I remember when we started riding, my brother and I, my mom was like, well, she never stopped us from doing anything, right? She was like, I told Mom, I think I want to ride too. She's like, okay, cool. She's like, call your agent. You need more life insurance.
Oh, my gosh. Well, it is dangerous. Said, it's dangerous, especially in Washington. It's wet out here.
She wanted to make sure I ain't going out without paying her.
Oh, moms.
Love her.
So I want to make sure that we talk about pricing, because that's a question that I get a lot from clients is, I don't have PIP. How much is it going to cost? And I said, hey, I don't sell insurance. I just promote it.
Yeah.
The cost of PIP and UIM, my understanding was that it was negligible, but what I'm hearing from you is it's really based on your credit score and your income and your demographics and all these other things that people don't have as much control over as, going to a different store and buying a different type of apple. It's not that simple.
Right.
So can you talk a little bit about the pricing for each and when if you're in the preferred market or the non-preferred market?
Yeah, absolutely. And I think that's where, we're okay with people paying more for more coverage, right? Where I feel the preferred markets come into play, it's how much of a jump it is to purchase insurance. So for example, let's say you're purchasing insurance for me. Mm-hmm. Your liability is $120 because you're a preferred client.
$120 per month.
$120 per month, liability only.
Okay.
And you're a preferred client. And you said, well, now how about we add PIP to that? And I'm like, okay, perfect. Well, it's going to be $130. So a $10 difference really, it's not much.
To add that $10,000 in coverage, it's $10 a month difference. Seems like a good deal.
Seems like a good deal.
Absolutely no-brainer.
Yeah. So, but remember this, you're a preferred client. So it's affordable for you. Think of the same client now. So you come in my office, you're a standard client based on your credit scores, based on your zip codes, based on your demographic. And you say, no, I want to add PIP. You're falling under the standard, company. Well, at this point, you're looking at $180 per month. At a huge jump where they almost make it inaccessible for you. So they won't tell you they won't cover you. They're just saying
much more expensive because of your credit score and demographics.
Right.
What's the credit score to change from being a standard customer to being a preferred customer? Do they disclose that to you, or is that all back office stuff?
Back office.
So you just type in someone's name and they say, this is the information that we have publicly available to us about Josh Brumley.
Yeah.
And he's never been in an accident, but his credit score is 620. Yeah. So he's gonna be paying the higher rates.
Exactly.
Wow.
So and then we never see that. So that's to be complete transparent. I never see.
It just tells you whether they're standard or they're preferred.
Exactly.
Okay.
So those two markets. Something that we might be able to take a look at in the future. It's state law, So here's what happens. So farmers submits for rating, right? They'll submit for a rate. They go through State of Washington Commissioner office. They will not allow us to bring out new rates unless it is cleared by them. Okay. Once it is cleared by them, then we can put that into effect. And they're the ones that decide all the premiums and prices and all the other good stuff. Actuaries decide all that.
Gotcha. So the person that's doing the actual pricing isn't necessarily the insurance company. You guys are just deciding whether your customer that's coming into your office is a standard customer or a preferred customer.
Exactly.
And a preferred customer gets the benefit of discounted rates, where a standard customer, which is more likely the average person, gets higher rates, and therefore it's less accessible for them to have
the PIP
or
in the UIM.
because it's a percentage of your policy, and that percentage is higher for the person with the bad credit score.
Exactly. Now, to be fair, right? It's insurance companies are going through something that they've never experienced before. They haven't made a profit for 5 years, and what they're doing is limiting the risk. And I know we hear that often, right? We're just limiting risk. No,
we got some
true.
backstage person.
Yeah, we're just limiting risk. So here's what the two words in insurance are right now: severity and frequency. And that's what drives those premiums. Post-COVID, there wasn't as many accidents and as severe. So exit COVID season or COVID time, now we have more severity, where now you don't see fender, a little fender bender. Now it's like a total loss every single time, and we have higher frequency.
So we're seeing more car accidents than we did pre-COVID.
Right, and we're seeing them at a higher
severity
level.
Wow.
So that's where insurance companies are having,
people forgot how to drive during COVID, I guess. Huh?
They're under stress. They forgot to drive. I don't know what's with them. I don't drive, so I will say this: I hardly drive. I get driven around quite often.
You're chauffeured on your motorcycle? I don't understand. This doesn't make any sense.
That's leisure time, but for the most part, I don't drive often. But what I'm saying to that is, to be fair, insurance companies are not making a profit. Right now, we have a combined ratio of 109. So what does that mean? That means that for every dollar that's coming into farmers, they're paying 109 out.
Wow.
Yeah. So we gotta be objective to everyone. Of course, these are big companies. Of course, they get, corporate America. Nobody looks at them in the light.
In a good light.
In a good light. But it is true. They're losing a lot of dinero. 9%.
Where does Farmers stand in relation to the other insurance companies with that ratio? Is it on par with the others? It's on par with every other preferred market. Okay, so like Geico's and all those other big names.
No, so Geico, Progressive, they're not really a preferred. They're not really a preferred company. Usually, they will actually take people who are more standard. So preferred will be Farmers, State Farm, Allstate, anyone who really has an agent. That's really what the preferred market would go to, and they actually are made for that kind of client. They have more access to an agent. They have more access to these conversations, right? I have these conversations on a daily with someone where someone who's buying from Progressive or Geico, unfortunately, does not get that treatment, right? They're buying over the phone. They never see their agent. They don't really understand what they're purchasing.
They just know that they need to have it or they're going to get a ticket.
Yeah. So I think that's it. So we're kind of par and par with every other company, but right now we're at 109, our latest combined ratio. And other things with that is insurance companies, for example, Farmers, they're kind of, the West Coast will kind of get the same rating. And when you think about rates and premium, you take all the losses that California experiences with wildfires, or that their drivers experience. So it's really
LA is a lot different of a world than Seattle.
Yet we pay for them.
Wow.
Right? Because we're under the same bucket. So insurance is a bucket you put money into, and should you need it, it's going to be there for you. So it's a hard market. I don't foresee insurance rates decreasing anytime soon. If anything, they're getting more expensive. Then you think of insurance on the landscape of the business is we need to resell that risk. Then who's going to buy that risk? Because we're reselling all the time, right? So it's a huge business. I love it. I love the intricacies and nuances of it. But it is unfair sometimes to the daily consumer. Yeah. Right.
And now the car insurance industry is always evolving. So what kind of what trends should other car accident attorneys be aware of in the insurance industry? What changes should we be aware of?
Well, for example, I think one of the things that, and I love this word trending, right? Because unfortunately, and it's so kind of weird, but if you look at whatever's happening in California in insurance, so if anyone wants to know what's going to happen next in Washington, we trend the exact same way as California does.
Interesting.
Yeah. We actually skip Oregon for some reason. They're on their own little,
Their own world.
They're their own little world. But for example, I mean, even for a PIP attorney, right? With Oregon, like I said, you must carry, an insurance company has to write with PIP and UIM. They are not allowed to write without it.
And here we have the option to waive it.
Exactly. Here we have the option to waive it. Let's go back a bit to that. Let's say that I missed having that signed form.
Mm-hmm.
Farmers will then say they missed having that form because the state of Washington now requires us to add it to them. So let's say you decide you don't want PIP. You never signed the form. Farmers will automatically add it to you because the state of Washington requires them to do so.
Got it. So they get that benefit if they can't produce that form.
Exactly.
That's good.
Exactly.
That's a good law.
That is a good law. So that's what happens with that. So if you want to know what trends will look like, look at California. Whatever's happening there in the insurance industry will then happen in Washington. One of the things that's going to happen is, again, we're trending upwards. More expensive, more accidents, more costly in your repair. So I think the one thing you might see more is those forms being so farmers has e-checkout now, so they want those forms faster now because they don't want to be involved in a lawsuit the next day. So I think that's something you will see trending a lot more, where those forms will be required to be even signed pre-bind. I know California, actually, that's a good question. I think California now, it's a pre-bind contingency. So that says we will not sell you insurance unless you sign you waive these coverages.
Or you accept
the
these
coverages.
Got it.
Another thing you will see trending now, and it's happening in Washington with State Farm, is they no longer can bind coverage that same day. So that means they have a 3-day, 7-day, right? So you can buy the coverage today. It just won't be effective until 7 days from now. Yeah. So you will see that a lot more. Again, they're trying to make a profit, right? They want to make some money here. And that's how they're stopping that risk. And I will say that, I will say this, we have a saying, and I have a saying in the office: new business runs hot. Your 6 months for a new insured are their hottest months. What does that mean? They're going to get an accident, you're going to take it. And usually they come with a total loss. So so that's the trend you'll see. Pre-bind contingencies for new driver, for, anyone starting a new policy. Binding authority being delayed for agents, 7 days or so, whatever the company wants to make the rule.
Wow.
So so you'll see that more often.
A fact, again, I keep talking about my book because that's just, what's at front of mind right now. I just finished a book meeting with my editor, but 1 out of every 5 drivers in Washington is uninsured. I don't know if that's a fact that you're aware of in the insurance industry. It makes sense that you'd be aware of it, and it's front of mind to you. But if anyone's uninsured right now, what do you recommend them to do?
Here's what I would tell everyone right now. Get a policy in place, because it's only going to get more expensive. This insurance is not going to get any cheaper. Get something in place that is within your budget, is within your means. And then, so here's how that looks, right? So the first 6 months are your most expensive months. Get what you can afford. Don't try to get all the perks and everything that bells and whistles, because it's just something unaffordable for you right now. And I always tell everyone, right, if you're in a standard market, which I work a lot with as well, I'm also very stern to say, hey, we're going to make you be a preferred client. My goal is for you to be a preferred client for every company to want you. I just ask for loyalty, that you don't leave me, right? Because you don't look good in 6 months. Yeah. You can't leave me. So, and that's very upfront, because nobody else can do it as fast as I can to make you go from a standard to a preferred client. And how do I do that, right? The first thing I have is a very, heart-to-heart but stern conversation. I need you to buy what you can afford, because right now we're creating a habit of paying your bill on time. We just want to create a habit. Okay? So don't go asking for PIP and UIM if it's out of your budget. Just get what you can afford. We want the high, we want the 50, 150. We want to make you look preferred already. And in 6 months, I'm going to take you from my standard company to my preferred company. And then I would then offer you PIP and UIM. But let's say you are like, you know what, now I kind of learned this budgeting thing for the first 3 months. I think I'm ready to add PIP and UIM month 3. Give me a call. Let's discuss it. We'll go ahead and add it midterm. And that's okay as well.
So people don't need to have PIP and UIM when they first buy their insurance. They can add it anytime.
Exactly.
Okay.
So get what you can afford. That's the first thing I would tell people right now. If you want it, you can have insurance, because it is true. 1 out of 5. It used to be 1 out of 3. It's 1 out of 5 now, and it's going to get worse as people come to, with the cost of living being so high. I can see why. I always tell people and I tell my team, you got to be thankful they're paying for this product, because you're offering them nothing. You're like, oh yeah, it's gonna be $3,000, $6,000. Give me your Reddit,
They don't leave with a new.
They don't leave with anything tangible.
Yeah, no.
You're not giving them. It's not a cop. It's nothing you're giving them besides, oh yeah, I promise I'm gonna be there when you need me.
Yep.
And please sign those paperwork, right?
Yeah.
So, get insurance that you can afford. Get it now, because it's gonna get more expensive. There's gonna be more loopholes for you to jump through. There's gonna be binding restrictions. Get it now. Get used to the habit of paying your bill. No accidents, no tickets, and in 6 months you'll be a preferred client.
Great.
Yeah.
Well, thank you so much for joining us. This was
you.
really educational. I'm sure we'll have you back on for another episode to talk about more things.
I heard it.
And more magic tricks. I hope at the next episode we get some magic tricks as well, some new ones.
Thank you guys for having me. It's been a pleasure.
I want to make sure before you put your jacket on, speak right into the camera. Tell them Instagram, social media, all of your.
What is my Instagram?
You gotta know it. Galicia Insurance
Agency, something like that.
Something like that.
Something. Okay, so
she's like, I gotta look. I got a social media person for this. That's okay. I got a person for it too. I don't know. I don't want to be all.
So first and foremost, I hope you saw my magic tricks. Okay. You can reach me at 253-507-2788. You don't have to call. You can just text me. I'm available 24/7. We have a great team who's available for you 24/7. Have your routing and account number ready, and your credit card if you're going to get insurance. That is the way my insurance company works, my agency. We are there to get it done. But you have any questions, feel free to reach out if you have any really pertaining to anything about insurance. But 253-507-2788. It would be a pleasure to be your agent. Just get insurance. It's a great thing to have when you need it. You need it. But give us a call.
On Instagram, it's Galicia Insurance Agency, right?
Yeah.
Galicia Insurance Agency.
Yes, it is.
Wonderful. Everyone's doing everything on social media nowadays, so they can actually get a quote from messaging your Instagram. That's helpful.
And my whole team is available on Instagram and Facebook and
everything
texting,
else.
and you need to call, but use it as your last resource.
Great. Thank you for joining us. Look forward to talking with you again soon.
Thank you for having me.
Thanks.